Today I'm going to do a short video on credit transactions. When we talk about credit transactions, we're talking about buying or selling now and items are paid for later. So we could buy now and pay later, or we could sell now and customers will pay later. Now you need to know two new things. First of all, you need to know what debtors are. Debtors are people that owe money to the business. Now, people are going to owe money to the business if we sell on credit. When we sell on credit, we issue an invoice. On that invoice, you're going to have some key information. You need to know who the customer is. You need to know what his account number is. You need to know what we sold to him and the amount that he owes us. If we sell on credit, we're going to use a new journal now called the Debtors Journal, or I'll abbreviate that to DJ in future. It can happen as well that the debtor returns stock to the business. Now obviously this is not a favorable situation, because if the debtor is returning stock to us, something is wrong with that stock. Maybe the stock was broken or damaged, maybe we delivered the items late, maybe we delivered the incorrect items, and so on. If that is the case, we are going to issue a credit note. And when you issue a credit note, we're going to use a new journal now called the Debtors Allowances Journal, which we abbreviate to DAJ. At some stage, at a later stage, the debtor is going to come and pay his account. When he pays his account, if he comes into the business, we will issue him a receipt telling him that he has paid us back. Now it is only at this stage that you actually receive money. So it is only at this point here that you're going to make use of the CRJ, the Cash Receipts Journal. So that deals with debtors. Creditors are suppliers that the business owes money to. So if we buy on credit, it means we buy now and we pay later. If we buy on credit, the creditor is going to send us an invoice. So we will receive an invoice, and on that invoice it will tell us who we bought from, how much we bought, what we bought, and so on. That will get recorded in a journal called the Creditor's Journal, which we abbreviate to CJ. If we are not satisfied for one or other reason, and we return stuff to the creditor, or we get given an allowance by the creditor, when we return things, we send that stock, for example, with a debit note. It is only when we receive the credit note from the supplier that we should make an entry in the Creditor's Allowances Journal, and that journal is abbreviated to CAJ. At a later stage, we are going to repay creditors. When we repay creditors, we make an EFT payment, and it is only recorded in the Cash Payments Journal at this stage, because it is only at this stage that you are paying back, you're spending money. Alright, I'm going to just do two activities now. The first one is identifying source documents which would be used, and they give you a list to choose from. Okay, and I tell you as well that a document may be used for more than one answer. Alright, the first one says we sold stock on credit. They do ask you to say whether the invoice was issued or whether it was received. If we sell on credit to a debtor, we are going to issue an invoice together with the goods that they take. If we sell stock for cash, your source document for cash sales is a cash register tape. Remember, it can't be a receipt. There's no way you can write down all the individual items that we're selling. So rather we scan the items, and then the copy of the cash register tape stays behind, and we use that to draw up our CRJ. If we buy stationery on account and on credit means the same thing. When we buy the stationery, we are going to receive an invoice from the supplier together with the stationery that we have bought. If a credit customer returns damaged stock, if he returns to us, we are going to have a credit note that we give to him, stating that stock has been returned by him. If a cash customer was given a refund for stock returned, that will get recorded in the CPJ. You will find out about that transaction by looking at your bank statement. If we return stationery to a supplier as it was delivered late, two answers are acceptable here. You can use debit note, which is what you would send with the stationery that you're returning. But remember, I told you it's actually only when you receive the credit note that you should make an entry in your creditor's allowances journal. If a debtor paid back part of the amount which he owed, if he comes into the business, we're going to give him a receipt. But if he does an EFT payment, we'll find out about that transaction from the bank statement. So either of those answers are acceptable. And then if we repay a creditor for stock bought on credit last month, we're making a payment. We find out about that payment by looking at the bank statement. Okay, the second activity involves identifying which journal would be used to record each of the following. If you issue an invoice, it means you've sold on credit, so that will get recorded in the debtor's journal. The second one, if you issue a receipt when somebody gives you money. If you get given money, it means you receive money, so that will get recorded in the CRJ. If you receive an invoice from a supplier for stationery purchased on account, we bought on credit in that case, and if we buy on credit, we owe money, it goes in the creditor's journal. An EFT was processed to pay a supplier for stock bought. If it's EFT, it means you're spending money straight away. If you spend money, that goes in the cash payments journal. Then a cash customer was paid a refund. Number 5 first. A credit customer returned stock. When a customer returns stock to you, you give them a credit note that gets recorded in the debtor's allowances journal. And number 6, a cash customer was paid a refund by EFT. They're spending money there, so it gets recorded in the cash payments journal. A credit customer was granted an allowance as he had been overcharged. If you overcharge a debtor, you need to give him an allowance. That gets recorded in the debtor's allowances journal. Repaid a creditor's account by EFT. Here we are spending money, paying money, so that gets recorded in the cash payments journal. And then the quality of stock bought on credit was inferior. The supplier thus granted the business an allowance. We are receiving an allowance there, so that gets recorded in the creditor's allowances journal. Now in future videos, I will actually show you how to do all the journals that we've covered here. And once that has been completed, only then will I move on to do ledger accounts. Okay, that's it for today. Thank you.